Hi there, boys and girls, ladies and gentlemen, and traders. My name is Dr. Greg Cloud. Welcome to the Elite Traders University presentation of Bulls versus Bears, the weekly forwards forecast. We're going to get started now. I'm going to share my screen. Let's go and get going here. Showing screen number 2, brought to you by Elite Traders University. Go to www.elitetradersuniversity.com for all your Forex trading needs to learn how to become a profitable trader in 90 days or less. Use my proprietary strategy and my mentorship and coaching and teaching. Been doing this for about 30 years, and I've helped hundreds of people become professional traders using my unique approach, my unique 3-step approach to learning how to trade the markets professionally. Okay. With that said, let's again time this for our weekly forwards forecast, Bulls versus Bears, for this week beginning July 30th, 2023. Can you believe it? We're at the end of July. August is right off the corner. Non-farm payrolls this Friday. Lots of good stuff happening the first week of the month, last week of the month, and month end also. So I hope you guys are doing well. Thank you for watching. Make sure you subscribe, like, and share this with a friend. And that way you can be alerted to all the wonderful things that we're doing here at Elite Traders University and Bulls versus Bears. Okay. Before we get started, I want to direct your attention to the risk disclosure on your screen. Make sure you understand all the risks associated with foreign exchange trading. And I've been doing this for, again, like 28 years. I worked as a in the Wall Street firm, worked capital markets, where I was a currency analyst, strategist, and also trader coach. And so I've helped hundreds, if not thousands, of students become Forex traders. And so I've also done great things with short-term day trading and scalping too. And you've already seen some of my results on my YouTube channel. So make sure that you join that, and also take a look at what we're having. We're giving a Forex baby steps. It's our just for $7, you have access to a wonderful education with videos, things to learn, help you become a professional trader for just $7. It's the best $7 you've ever spent. And you go over to the link, we can give you that. It's the number 4x and babysteps.com. And you can go there to, I'll just bring it up there. Forex baby steps, just $7. You have a few seats left. And it's the only way to get access to our weekly training replays. I do Thursday at 8 p.m. We do our weekly Elite Traders Live open house. We teach you new topics every week, every Thursday at 8 p.m. Eastern time. And the only way to get a recording is to join our community. Again, it's just $7 lifetime membership. You get access to the full whole Bulls versus Bears series library, Bulls versus Bears newsletter, plus exclusive members only pricing on Elite Traders products. It's the best $7 you'll ever spend. Okay. Enough of that. Let's get right into what we're going to talk about today. We're going to talk about the dollar index. Euro dollar, the pound versus euro dollar, also known as cable, Aussie dollar, also known as Aussie, dollar yen, also known as dollar yen, and the dollar CAD, called the loonie. But let's go ahead and move on. Okay, I'm going to show the way we actually look at these currencies and learn about how they move. I'm going to share with you my top secret tool for accessing the market. And it's called my market heat map. My market heat map is arranged by currency period by percentage change. It tells you what's hopping, what's popping, what's dropping, and what's not in the market. Green is an uptrend, red's in a downtrend, gray stay away, sideways market. And you can come here. We have 50% off our subscription. Normally it's $99, it's 97 cents a month. You have $49.79 of special. But guess what? I'm such a generous guy. You can actually access one of 6 powerful heat maps, the Forex majors. And these, when we have an active market, we'll have things turning different colors, green uptrend, red downtrend, gray stay away. Right now, it's gray and things aren't really moving a whole lot. Maybe they move a little bit more later on. Okay. Let's take a look at our economic calendar. And we're going to refresh this. Show more is usually helpful. And let's see what's going on for Monday. Actually, we have some Chinese data that came out just a few minutes ago. Oh, actually, 18 hours. In 18 hours, we have some Chinese data. And but Monday, and that is the for the it's a Monday here. It's right now. It's China. It's Sunday, I guess. NBS manufacturing PMI 49.2. Previous number is 49, and we'll look for the Aussie dollar to possibly move on that. And let's go ahead and move on to Monday. Okay. Right now, that's Monday is the 31st. And Monday was the 30th still. Right. 30th, 31st, right. Okay, Monday 31st. Okay, interesting. Interesting, my clock says 2:44 a.m., which is the next day, but it says 7:30. It still says yesterday's date. Interesting. Eastern time. Okay. We're not going to try to understand this because today is the 31st. Today is Monday. We are on Monday, Eastern time. Okay. Anyway, Monday, 4 a.m. in just a few hours. In fact, we're going to have the euros. Oh, you know what? I need to refresh this. Maybe they'll do it. And maybe that'll 4 a.m. Okay, noted. Okay, we have the Italian flag. I call this fun with flags. Okay, because we can look at the flags and we know what we're going to be trading. And since Italy is in the eurozone and we don't trade the lira, the Italian currency, we trade the euro. So we're going to look at the euro at this time. GDP growth rate quarter on quarter supposed to have dropped from 0.6 to 0%. And then we have GDP growth rate year on year, YOY stands for year over year. So comparing 2022 with 2021, because 2023 isn't over yet, and it's supposed to fall from 1.9% to 1.9%. So all these, if you notice, all this economic data is kind of backwards looking. So it's very interesting with the lag involved in this, and then the people trade money in the now off of something that is in the past, right? Inflation year on year is supposed to have dropped from 6.4% to 6.1%. So all that comes out at 4 a.m. 5 a.m. we're gonna have the Euro CPI flash PMI or CPI. We said CPI consumer price index. With that I, change that I from index to inflation, and we're looking at inflation rates. And inflation rates are a big driver of currencies because it also make it the central banks will be more likely to hike interest rates to try to fight the good fight of inflation. And remember, we all know how they fight inflation by removing jobs out of the equation. Fewer people buying stuff lowers the amount of the demand. We deal with supply and demand. More demand with lower supply, higher prices. So if we can say, if we lower the demand, prices would fall. That's what we do, right? It's all just in reverse. Inflation rate month on month supposed to have dropped from 0.3% to negative 0.2%. Inflation rate year on year supposed to have dropped from 5.5% to 5.3% in the eurozone, and with the European Union flag. So this is for the entire European Union. Now, not just Italy this time, but Italy and Germany and France and all the other countries that make up the eurozone. So this is the big picture. It looks like inflation is going down. Core inflation rate. This is a number excluding food and energy. I use food and energy. I don't know how they can make any kind of sense out of inflation data without food and energy, because everyone needs it. 5.5% dropped to 5.4%. GDP growth rate is supposed to also rise from 0% to 0.2%. This is GDP rate quarter on quarter. That means they're looking at the last 3 months compared to the previous 3 months before that. GDP growth rate year on year flash that's supposed to drop from 1.1% to 0.5%. And then we're going to have some Chinese data in the middle of the day, or actually in the morning. We have the Calcin manufacturing PMI. Supposed to drop from 50.5 to 50.3. PMI is purchasing managers index. They actually poll people who purchase stuff. Are you going to buy more stuff next time? They go, nah. we're afraid things are bad. But it didn't drop that much, no, not a major drop. But the big news is on Tuesday, we have the RBA, their interest rate decision. Remember, interest rates are the biggest interest rates of the central bank. Their interest rate decisions, one of the biggest drivers of currency movement. And so RBA is supposed to hike rates 25 basis points from 4.1% to 4.35%. 25 basis point hike would mean 435 basis points since the lows we saw last year in order to fight inflation, right? So they don't, before during COVID, they printed tons of money and everyone was loosening the money supply, creating more money, more to create inflation, to create demands, to create jobs, stimulate the economy. But when it becomes overstimulated, they put the brakes on by reducing the amount of money that's coming out, slowing things down, and causing things to slow down, to lower inflation. But this also usually makes the currency more valuable and makes the currency expense more, more by having, it's a law of supply and demand. The fewer of things that you have, well, the more higher the price, right? Dirt is cheap. That's why we get the term dirt cheap. There's a lot of dirt everywhere. Unless you're in Kevin Costner's Water World, and if you're in Kevin Costner's Water World, then you know that there's not much dirt. So dirt was very expensive and water was very cheap, all right? So it's all about supply and demand. It all boils down to the same thing. 355, we're going to have the HCOB manufacturing PMI final, supposed to drop from 40.6 to 38.8. They have unemployment rate out of the Eurozone, supposed to remain up at 6.5%. And then you have the 10 a.m. news cycle on Tuesday, US JOLTS job opening. It's like Jolt, those that used to be a cola called Jolt Cola, twice the caffeine and twice the sugar, right? Jolt Cola. And you can only get it at gas stations in the middle of nowhere. I think it's illegal to sell within the city limits. Anyway, the Jolt job openings supposed to fall from 99.824 million to 9.62 million. And then at 10 a.m. we're going to also have ISM manufacturing PMI 46, drop to 46.8. And then at 6:45 p.m. we're going to in the beginning of the Asia day, but we're closed the US day. Unemployment rate out of New Zealand supposed to rise from 3.4% to 3.5%. Notice that as interest rates go up, jobless claims and job numbers start to move as well. Unemployment change quarter and quarter. We're dropped from 0.8% to 0.6% in New Zealand. So we're going to get unemployment rate and unemployment change. New Zealand dollar will be in play at 6:45 p.m. It's kind of sketchy that early, right after New York closes, not a lot of liquidity. Nice to see maybe a couple hours after that. I wouldn't actually trade that, but it will have an impact on the New Zealand dollar. At 7:50 p.m., we're going to have the Bank of Japan monetary policy meeting minutes, and that's when they just tell why they left rates unchanged at negative, so 0.1%. They're probably the only central bank on this planet that's still negative, but that's Japanese for you, right? What that does is they're printing tons of money, and it makes your stock market go right up. It makes, since you're printing so many yen, remember supply and demand, the more you have, the less it's worth, right? So if they're printing yen and having negative interest rates, it makes the yen worth very little. Then it makes other currencies versus the yen very strong on a relative basis, okay? Pretty simple stuff, right? Let me know in the chat box if this was helpful, this explanation, because it was very clear to me. I just amazed myself. Give myself a high five. There we go. Wednesday, August, ring the bell. August 2nd, Wednesday, August 2nd. We have Swiss consumer confidence, and they're more confident about clocks and chocolate. But they have really nice watches too. Confidence is supposed to have risen from negative 29.7 to negative 22. And then we're going to have US ADP employment change. I remember ADP employment change used to be on Thursdays at 8:15. Now it's 8:15 on a Wednesday. ADP is a company that prints paychecks for private sector. I remember getting an ADP paycheck when I worked for the brokerage. ADP was the company. So who better would know how many people are getting a check than the company that actually prints checks, right? But sometimes their numbers are a little bit different than non-farm payroll. So they usually, this is a precursor or foreshadowing of non-farm payroll. Non-farm payroll comes out at 8 o'clock the first Friday of every month. And so we're going to have that first Friday coming out. ADP, and we'll see the difference with ADP. ADP says the job numbers are going to drop from 497,000 previous month to 188,000 for the month of June. Okay, so that would be huge. And notice that as interest rates go higher, jobs creation slows, which is what they want to happen. And remember, the Fed is data dependent. So this is the data point that they're looking at. They don't tell you what the data is, because if you knew that they were hoping that you lose your job so inflation would go down, you would be kind of angry. But this is something that we don't talk about. So okay. Anyway, moving right along. We are balance of trade from Australia supposed to have dropped from 11.791 billion to 10.8 billion. Remember, most of their trades done with China, and China is slowing down. I told you that when China catches the cold, then Australia economy catches like pneumonia, right? Because they're so intertwined. At 2 a.m., we're going to have German balance of trade, and that's going to impact the Eurozone because Germany is the largest economy in the Eurozone. And so we're looking at the balance of trade increasing from 14.4 billion to 15 billion, right? And when China is losing on the trade side because they're not selling as much stuff, well, then the people are going to look for other manufacturers. You can find manufacturing and exports going up for other countries like Germany, like Vietnam, like Malaysia, that the people are looking for other substitutes for China, right? Then at 3:55, we're going to have HCOB services PMI final out of Germany, supposed to fall from 54.1 to 52. And then Super Thursday from UK, we're going to have lots of UK data. The pound is going to be in super play right now. You're going to have the BOE monetary policy report at 7 a.m. on Thursday, followed by the MPC meeting minutes at 7 a.m. Then you're going to have the MPC vote hike. They're going to vote for a hike. And then they're going to have the vote for an unchanged and vote for a cut. And then they're going to be viewing interest rate decision. They're widely expected to raise rates from 5% to 5.25%, 25 basis point hike. And that would move the needle on the pound. Usually when they hike interest rates, it makes the currency go higher. We'll see. With the dollar strengthening too, we'll see how much of a spike we get. There may be a pump and dump where they pump the currency leading up to the announcement. When they make the announcement, it could drop. But we'll take a look at the technical picture coming up, and we'll find out more. So just stay tuned to see how the technical picture fits in with this. But the pound is in play right now because of this big giant announcement happening on Thursday. But these guys are not, the big guys and the big hedge funds are not waiting until Thursday to put money in and out of the market. They're taking positions now. They're either distributing or they're accumulating. If a lot of this data is already known. They know what the hike is going to be. Clarence Speak has already handed out the crop report. Everyone's already got the envelope. I've got my envelope here too. Everybody's got their envelope. Everybody's got their envelope. So everybody's ready, but you guys haven't, and that's what I'm trying to share with you what this is going to be. I'm just telling you about it. Not really, right? They don't call me anymore. Jobless claims coming up at 8:30. Jobless claims supposed to increase from 221,000 to 227,000. Well, of course, they keep hiking rates, so you're going to be fewer jobs, right? And their goal is 4.5% unemployment. So we're not near there yet. So you can expect interest rates going higher. USD We have for the dollar, ICE manufacturing PMI, supposed to actually drop from 53.9 to 53. And then you have the RBA statement on monetary policy. I don't know who's up in Australia. Oh, yeah, it's 9:30 p.m., not a.m. Right, correct. And so the Australian dollar will still be in play after the big announcement we had the previous days. Okay. Friday, we're gonna non-farm, it's non-farm payroll day. Ring the bell. This is gonna be a tremendous announcement after, and we'll see if payrolls are strong. That might be negative for the market because that means that they're gonna keep hiking interest rates. However, if we see a lower non-farm payroll number, we could actually see a rally in risk. We could get a rally in the stock market. More people lost jobs. All right, the Fed's gonna stop hiking and things are gonna go higher. It sounds kind of crazy, like bizarro world, right? Remember the bizarro world, Superman with the backward S on his chest, Solomon Grundy. Okay, anyway, the Injustice League of America. Non-farm payrolls supposed to drop actually from 209,000 to 200,000. That may not be enough to get the Fed all happy about not raising interest rates. Unemployment rate still 3.6%, still too low. They want to see it at 4.5. Average hourly earnings month on month 0.4 to 0.3. That's exactly what they want. They want wages to drop. That's a sign for the Fed. Not a good sign for you if you're earning a wage, but they're rooting for lower wages. Okay. So if you want to opt out of that cycle of, hey, they want you to lose your job and get lower pay, then maybe you should learn how to trade, right? That way you're out, you're not going to get counted in any of these statistics. You're not a statistic, you're outside the system, right? And like the Forex Morpheus, I've been plugging you from the matrix so you can live free, right? That's the whole idea. Everybody wants to live free, unless you want to be plugged in, you like being plugged into the system. It might not be bad. Take the blue pill, go to sleep, not bad, right? Anyway, but it's more fun with the red pill. Unemployment rate 3.6%. I left off the average hourly earnings month on month. I told you they predict it's going to go lower, and that's happy days for the Fed. You're making less money. All right. Unemployment change for CAD. Look, 59.9 to 20.6. Higher interest rates around the world are doing exactly what they want to do. I could shut you up in a room about pandemic. That's the one way of lowering, or they can just make you unemployed. Okay. Unemployment rate is rising from 5.4% to 5.5%. And people around the world are cheering about that. Because they're not working for anybody, they're working for themselves, right? Participation rate supposed to have risen from 65.7 to 65.8. And then we have ID PMI at 10 a.m., 49.7, supposed to drop from 50.2. I think that's it. That's it, yeah. So let's go ahead and get to the technicals. And I know you've Greg, you've suffered through this, but it's very important that you know what is in play. Because if you're just trading some whack currency that's not even moving because it's your favorite and you don't make any money, it's because this is going on right here and you don't know and you don't care, but then you're losing money. You need to pay attention to the economic calendar. Go to mymarketheatmap.com. It's free for you to use, okay? It's free for you to use. You don't have to subscribe to get access to one heat map and the economic calendar. You'll do really well trading the majors with this economic calendar. All right, let's go right to the dollar index. I like to start off with the dollar index. Dollar index is the that's why they're major currencies, because they're traded against the US dollar. This is a DXY, a chart of DXY, a monthly chart. It is a basket of currencies versus the US dollar. And I like looking at this 50,000 foot view of a monthly chart, getting this big wide view. You like follow it like a river. It's going up, it's going down, it's going up, it's going down. You can see it's been going up recently, right? You can see the last toward the right edge of the chart that we're making these highs, higher lows, right? However, you can see with Greg, the dollar's been losing value for the past, 40 years, right? I was in I graduated high school over here, right? Anyway. Wow. So we get this downtrend, we got an uptrend right here. Pretty cool. Yeah, right. But then we get this downtrend line right here like that. Right? And we had this support that's been going on for a really long time. We've been, you know, sitting around here like this, the sideways consolidation. And we've been here for this for months. 1, 2, 3, 4, 5, 6, 7, 8, 9 months since the hikes. And we're still hiking rates, but the hikes are not moving the dollar up. So other currencies have been trending up against this US dollar sideways movement, right? Before the other currencies were getting crushed when the dollar was rising. But now we're sitting around with this little stick sandwiches formed right here. Green bread, meat, bread, and then we're right there in the zone right here. And we got a long wick where, hey, we dropped down to the 99.50 area. And everybody thought, oh, the dollar is over, it's over, they're not gonna raise rates anymore. And then bam, snap back. This was a bear trap where people got short on a break. The breakout traders got whacked, right? Got the breakout, south side break, and then so now we got breakout, and then price snapped back inside. All those bears got trapped, right? Because they were looking for lower lows, and instead they got a higher low and a lot of pain. Okay, so let's go up to the weekly chart and walk. We had the, it's like looking down on the troops from a satellite, like 50,000 feet, you got the reconnaissance, those big Blackbird SR-71 or these huge spy planes that fly at super high altitudes. They can look over the terrain, see where the troops are located, where all the tanks are going and stuff like that. Right, we get that. A big salute to our men and women who protect our country. The armed forces, Army, Air Force, Marines, Navy, Coast Guard, keeping our coast safe too, and the Space Force. Don't forget the Space Force, guys. They don't get enough love. Here we go. So we've got this downward trend line, but we got this rising trend line that's just starting, right? And this is the bear trap. Bears got trapped, and now we have a harami and a reversal back here. So bulls versus bears, I am constructively bullish on the US dollar as we continue to make new highs. And I think we get back up to the 104 area at least. Might take a little bit of a backup and then continue on. And then that's going to probably impact a lot of the other major currency pairs. Let's drop to the euro, which is called the anti-dollar, EURUSD. European Union. And we're going to start our monthly chart and work our way down from there. And remove. And just walking through this here, we can see this was we had a bear trap here. It was like a big one here, right? Monthly drop, and then a pullback, right? And we remove all drawings, start again. All drawings again. Now that we had this level of support in the 107 area, no 101. 103, right? 103, yeah. So we broke that support, and then we came back up, and then we rallied against a Fibonacci resistance here. We rallied against 618. Big rally to go from the top to the bottom, and now we're here. We're backwards here. The Drake song backwards. Now we're up in here, and we bounced off that 112 area, and we've come back down on the chart. And we might do a little bit more of we have this downward trend line that's coming into play. 2 points. Let's walk it down to the weekly chart. And see our weekly chart, nice little like an evening star, 3 drives pattern, 1, 2, 3 drives, 3 drives pattern, bullet. Northbound 3 drives pattern is very, very bearish. And we actually see a move right back down to the 95 area. Or, I would split the difference and say, let's go down to half, but so this could be extremely bearish, right? And let's walk you down to a daily chart. And, we have we've dropped significantly. We have a Harami. So obviously, I would believe that we have a short-term bullish move higher just to relieve this kind of because you're going to have guys going, oh, buy the dip, right? But buy the dip crowd are going to come in. Because look at that trend line here. They're going to buy the dip. They'll make some money if they can get out. The key is you want to be able to get out of something like that. Don't think it's going to go all the way north. This thing, not all the way north, all the way north. We might get back up in here somewhere and then come back down. Right. So I think short term bullish and then medium term ultra bearish, right? So that's how I think about the euro. Let's go to the pound GBP USD cable. And the reason why they call it cable is because in the 1800s they laid this thing called the transatlantic cable connecting Great Britain with Newfoundland, with North America. And so they could wire, when we wire money, we send it over copper, these copper cables, right? And then when the euro came out, they said, okay, if cable is called cable, pound dollar is called cable, we're going to call the euro called fiber optic, like glass little, using light to transmit data versus electricity over copper, like gold/pound dollar, right? The pound is one of the oldest currencies, over almost 1,000 years old. And I think I might have a pound right here. I have a pound. Yeah. I've got a one pound. Yeah, pretty money. That's why it's probably worth more than ours, right? Anyway. Monthly chart. And we had a similar breakdown. And we have a low like that. Usually that low gets tested. Yeah, low down here at the low down. You dirty low down. Boss skags, right? Down here the 103 area. Maybe we get another test at the 103, or maybe at least half. And we have a rally from those lows. I call it the King Harry rally. And after the drop, the queen, when she passed away, currency kind of like they gave her like a salute, and then now that the King Charles is king, now we have this kind of King Charles rally, which I think will go much higher over time, but I think we get a little bit of a pullback here, maybe back down to the one spot, what's about 1.8 area. And we get some type of a pullback before a eventually much higher, when the Fed would stop making everyone's life difficult, and then we could see a maybe inverted head and shoulders and a price higher. But I'm short-term bullish on the pound dollar and medium term bearish. Reason why we have an interest rate announcement that you can see this, maybe we're topping out and we are hitting some Fibonacci's and hitting some the 618. We kind of like hit that, dancing around there, might get a little pullback there. Short term bullish, medium to long term, medium term bearish, but long term bullish. Okay. I think it'll go in line with the dollar. Okay. We also have in place Australian dollar, AUD USD, and the AUD USD. We have had rising interest rates, and sometimes I remember trading years ago, and they were hiking the, it was Ben Bernanke. I was Bernanke. So they say, hike interest rates, hike interest rates. He hiked and the dollar went down and I lost money. I lost money on an interest rate trade. And because they've been hiking all this time, the market kind of like gets used to it. It says they pump and dump. So we might see something with the Australian dollar where this does not look particularly bullish. This looks bearish. We have tweezer tops, which is a bearish chart pattern on a monthly chart. I mean, that's like tremendously like super bearish, right? Because this tried bullish big green candle, smack down, big green candle, smack down, smack so hard it turned red, got my bloody nose, right? So this looks extremely bearish on a monthly chart. If you drop it down to a weekly chart, well, you can see there those 2 weeks turn into a double top, right? So you're dealing with, you're below the 200 moving average. You got a double top. This looks very bearish. So even though they're hiking rates, it still may not be enough in order for it to move the Aussie dollar higher. And in fact, it may just drop, right? Go into a daily chart, and we can see that it's rolling over as well, walking it down. And we could come on down to a Bob Barker. Come on down. Price is right. We got down here, we got 60, 64, 61 or so. Yeah, so this looks very bearish. So I'm bearish Aussie dollar. Maybe we come up for air on a lower time frame chart, like maybe like a 15-minute chart. But I think we start plummeting new lows, right? I don't think it might not even rally. I mean, we could get an ABC rally here and then drop, but I am bearish Aussie dollar. Okay, Kiwi dollar, same way. Even though we've got some pop in the Australian, the Aussie Kiwi complex because of the China supporting their commercial real estate ventures, the people who invested in the commercial real estate, they have tons of losses, billions of dollars of losses. And now the Chinese central bank, the PBOC, they have strengthened the yuan, and then they're also providing support to the economy. So that was a shock, little jump, like a defibrillator on Aussie and Kiwi, but that made those fade, and the trend should return. The downward trend should continue, right? Move all drawings here, and let's take a look at our monthly chart. Work our way down on the Kiwi dollar. Again, these are the Kiwi dollar or Kiwi currency and the Australian currency are proxies for China, and we've seen that China, even their our foreign minister has been changed, and one guy they can't even find. So it's like, no, I don't think everything is well in China. Okay. We have some support coming in at 54.87 or so. But we're making lower swing highs and lower swing lows. And so we may continue to make our way down. We have a tweezer, lots of wicks. Every time the Z tries to rally, it's been met with sellers. Right. Let's go to a weekly chart and see that we've just been accumulation. There's lots of distribution that's below the 200, not able to make new highs, and we could probably see a retest of this low here. Right. Bulls versus bears. I'm bearish the Kiwi dollar. That's a big fat arrow there. Woohoo. Okay. Daily chart and we go to 4-hour chart. Maybe get a little bit of a rally, but any look to sell any rallies. We're trending. We're in a downward trend channel. Right. Kind of, sort of. I just clone that, right? Clone it like a sheet. And take that to the top side like that. Yeah, we got it. We got a trend channel heading down. Now, if we break above a high, we can get a bust through the upside, right? If we can break, but it seems like we've got a lot of resistance coming in here at the 67, 78 area. Looks like it's more or less, there's more congestion up here, and price usually goes where there's less congestion and lots of empty space here for this thing to drop some more, right? And maybe even we get down there back in the 50s. Okay, let's go to we covered all of those. Let's go to USDJPY. And interesting how we're gonna make some new highs here, monthly chart, and we're gonna get rid of all the drawings if there are any, and we can see that this has been on a tear for a long time. Lots, this higher highs and higher lows, and then we sold off dramatically, very fast, and now we're recovering, and we did get a pullback for the month. However, the month is almost over, and we're going to have a new candle coming out of the month, and we do have an uptrend. Moving down the weekly chart, higher highs and higher lows. Also, we have a little dip here on the weekly, and the weekly seems to be wanting to go higher. Right? So you got the trading. You put the arrow tool here they create an arrow menu. I'd rather have it up here, or at least duplicated here, because I'm so used to looking at that. But anyway, I'm bulls versus bears. I'm looking for a retest of the 151 high. Like the dollar is strong, woot. The yen, they're printing lots of yen, and this was a awesome entry to get long here for this to keep going. That's on weekly. Let's go to a daily chart. And we had a little bit of a pullback, a retest of the trend line, and now bullish engulfing. This thing is set to launch, and at least back up to first take profit. I would get 144.99. Let's put it 45, right? That'd be a pretty good move. That's like 300, 400 pip move, right? Let's take a look at dollar CAD, see if you can see something similar. The dollar pairs, dollar back in the driver's seat, and we can see dollar monthly chart. Got the loony is a little bit loony, right? Yeah, after we've been making after making this double top here, back in June 2021, like almost a year ago, over a year ago. And then we have low, we've just been stuck in a range. We get to the bottom, we get to the top of the range. We didn't get to the top of the range here, right? We have a Harami kind of like with a morning, part of a morning star, which is a Harami. And so the buyers stepped in with tweezer bottom, and so that's a bullish pattern. We have 2x is better than 1, right? And so we look for maybe price taking off, from this area of support, and we can make this a little bigger, and maybe I can control plus, make this bigger. There we go. 31.29. See, I'll move back up to we look left for your targets, and 38.62. So the next target that immediately we follow at 39.74. And then we have wick highs that can be set as targets at 41.71 on the dollar CAD. We also can see 43.12. So we do have a rising uptrend, also giving us higher lows, right? And so we haven't really broke that trend line that goes all the way back to June 2021. Okay. Dollar CAD, bulls versus bears. I am bullish. Dollar CAD. Okay. Let's take a look at gold, right? Dollar CAD, dollar Swiss, USD CHF. That should be it's coming off some pretty large move downward, right? spike low, almost down to the lows of the Swiss National Bank. And actually, yeah, right there, the Swiss National Bank, that was the big giant move down there where the Swiss National Bank broke the peg of the euro and caused many companies to suffer, and traders lose a lot of money based on that. So we're sitting right on, very close to this old low, 83.05. Maybe we tag it for history's sake and then return back. Looks extremely bearish on the monthly. However, sometimes we have this overshoot and sitting at the support area that we've had back in 2014, right? And what were you doing in 2014? Maybe it was that Jonas Brothers concert, maybe. Okay. Going to a weekly chart, and you can see that we're getting a little turnaround there, and maybe turn on Tuesday. We'll see more of that breaking back up from that area, that 67.25 area. Sorry, 87.25. I was like 67.25. We look at it, right? There we go. Nice little support there. Nice little flag reversal. And then we can go down to a 4-hour chart. And you can see the multiple bottoms. We put a bottom in that the whole number round number, the 8600 was nice support. We're still below the 200 moving average, but with the dollar strength, the bulls versus bears, dollar Swiss, I am bullish the dollar Swiss. Okay, let's go into the other. I think we covered all of the major currency pairs. Let's go ahead and look at gold, XAU, USDs. What we trade this as a winner's circle. Like every time we meet, people trade with me for 2 hours a day. We're going to be trading in Cabo for 5 days and an all-inclusive resort. We're also going to be, we're going to talk about entity structuring, setting up a commodity pool for trading, for managing funds. We have a certification, Elite Traders University set up a certification to teach my system and all that. You can talk to Michelle at elitetradersu.com to find out more about joining the winner's circle. Okay. Let's take a look at gold. And we got gold on the monthly chart. And very interesting, gold doesn't pay any interest. And we get this all the drawings there. And you can see that we had some higher highs. I was ever hitting the bottom here back in 1034. Imagine $1,000 for gold, and now we are about $1,900 for gold, right? It's some higher lows, and then what's happening is we're kind of flagging out right here, right? Kind of flagging out. We've got triple top flagging out here. We have a flagpole, false break to the south side, which is pretty bullish when we broke support and we still came back into the channel. And rarely, triple tops are a rare breed. You don't really see many of those. Usually this will break north pretty hard. And we do have a monthly rising trend line that we're bouncing off there. Let's go down to a weekly chart, and we can see that we've got a couple of dojis totally indecision for weeks. We don't know. A doji across is a sign of indecision. Your decision may have to cross. We got these crosses, right? And if you haven't made a decision for Jesus, you should, right? Anyway, weekly, we'll be down to a daily. And you can see that we've got a kind of a bullish Harami here on the daily chart. And we are above the 200 moving average on a daily basis, which is pretty, this is a bullish sign, right? I'm bullish gold based on this moving down the 4-hour chart. Maybe short-term bearish, maybe a bearish test, retest, maybe a retest of the trend line at 1940. And then from there, I see a move back toward the maybe the 2000 area. I think we get one more push down though. One more flush out sweep, liquidity sweep. This is set up a liquidity sweep. And then we can probably see them higher. So short-term bullish, no, short-term bearish, medium-term bullish on gold. Okay. Moving right along. Let's go ahead and go look at the indices. SPX 500. I'm thinking, you know, and they've been trying to scare people out of this market for a year, for almost a year. And they kept saying, oh my goodness, they're raising interest rates and we're heading to a recession. Do you see a recession? Oh, well, it may take some time for a recession to show up. Well, meanwhile, you're telling everyone to stay out and all these people saying the S&P is going to roll over. Look what's happened. The S&P 500 has been making new highs, right? And in earnings season, while interest rates are going higher and the stock market's going higher. Usually that does not happen. So something is amiss, right? Are we? No. And the real culprit may be, do we really have inflation? If we really did have inflation, then companies would make a lot less money because cost of raw materials or cost of labor or all these things would be a drag, and that's why companies would start losing money and the stock market would not be going up. But that's not happening, guys, right? Companies are reporting record earnings, they're hiring people, there's job growth. So where is the inflation? I'm not going to answer that question. That's for you to answer. Right? Is there inflation? Yeah, okay. I mean, gas at the pump is about the same, and other than the short-term supply disruptions, and it's what the Fed said earlier, but no one believed the Fed, and the Fed was actually right. The Fed told the truth, and no one believed them. They said that inflation is transitory. It's transitory, and they said, "Don't worry about it; it'll go away." And after a while, people said, when you're saying $8 eggs, no, you're wrong. You're behind the curve. And then it became a self-fulfilling prophecy. So now it's like, okay, now these people want inflation. Let's make inflation, right? Because everything in economics is going against what normally should happen. Things are going up that shouldn't. Things are, this should not be going up. And, unless there's other things going on, right? So we got to trade what we see. We can't listen to what they say. If they tell you, hey, the stock market's going to go up because of inflation, no, this chart clearly tells you that the S&P, and there are plenty of analysts. You go to Twitter, and these are all the people that said S&P is going to sell off, S&P is going to sell off, S&P is going to sell off. And I was telling you, this is a bull flag, and this is going back to the old high. And I've been saying that over and over again, right? And look, higher highs and higher lows, bulls versus bears. I'm bullish S&P. Hey, ring the bell, right? So just buy an S&P ETF and let's let it roll. But don't worry about all this. Anyway, NASDAQ, NAS 100, same thing. Tech heavy at NASDAQ, new highs. Might have even more to go higher there. We get 16,725, higher highs and higher lows. All the arrows I pointed out to. There's lots of empty space here, gap space. We're going to see that high and more. Okay, bulls versus bears. I am bullish NAS 100, right? Okay. So anyway, I hope you enjoyed that. I know Bitcoin. Somebody has to remind me. Okay, Bitcoin, Greg. Yes, gotcha. Bitcoin, interesting animal, right? Because Bitcoin is a competitor for the US dollar. And since it's a competitor to the US dollar, they're probably not going to let this go any higher. We might see this drop back down to the bottom part of the range, in this range between 15,000 or so and 3,000. So we may come back down and test this low again and then go back up. And we'll just probably hold this range for a long time. Okay. They were able to manipulate. Gold is a similar, people think, in case of civil unrest, we're all going to go to gold, go to hard currency. And so Bitcoin was going to be the new gold, right? In case of something happens, the US dollar, nobody wants it, you're going to be able to use this electronic Bitcoin, right? Now, if the grid and everything fails, I don't know how you're going to exchange Bitcoin. Your Bitcoin ATMs are just not going to work, and you can't carry Bitcoin. The distributed ledger requires electricity. So anyway, that's the side of the limitations there. But gold, has been manipulated by JP Morgan Chase for like 10 years. One bank and two traders been able to control the entire gold market. So you think Bitcoin, with the Fed having unlimited firepower, are just going to keep this boxed in between 15,000 and 30,000. And they're going to keep this boxed in here for decades. If they can hold gold, if gold was held in a range by two traders at one bank, Bitcoin threatens the whole dollar system, could be in the sideways chain. Now, I'm saying that you don't trade it. I mean, I'd sell it here. It gets down to 15,000. I'm going to load up on it. I'm going to load up on it because they're recycling whatever they made from buying it at 15, they're selling it again at 31,000, and they're going to use that money, the profits they made, to short this and get this back down. And this is going to happen, and it's going to go on and on and on and on. All right. So, with that said, bulls versus bears, I am short-term bearish, short-term bullish, right? Because all range is down, up, down, up, down, up. Just like back here, this was down, up 4 years, okay? So putting it in for a long-term, retirement. There's so many things there's some US stocks I would love to own on a pullback, Apple, NVIDIA, Microsoft, not making any recommendations of any kind, but for my own portfolio on dips, those with Amazon, anything which I use all the time, rather than this, because you're hoping to get a run like this. The thing about it, this run took years to do. And we can move sideways again till we're able to do that again, maybe in 2030 or so. Like the guys holding on to Iraqi dinar. Anyway, I don't want to pontificate or rain on your Bitcoin holler parade. I'd be a trader of Bitcoin, but not an investor of Bitcoin. Okay, anyway, with that said, if you would like to sample what we do, so come over to forexbabysteps.com. For $7, you get access to the recording of this as well, and also the Bulls versus Bears newsletter, and also our weekly trading plays. And we're going to give some more content here. $7 one-time charge. We'll look forward to seeing you there. And then also, if you're looking at wanting to find out more about what we do as far as trading or learn more about our program, come over to 4 Pillars to 6 Figures. We have to fix that. 4 Pillars to 6 Figures.com. Oh, I think I've got a period in there, right? Or just go to leadtradersuniversity.com, right? Okay. Anyway, I'm going to stop here. Have a free masterclass. Come to the free masterclass, and then you can get signed up here. Okay. All right. Thanks so much, guys. Talk to you soon. Cheers. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!